welcome back to the deep dive.
Yeah.
You know we like to take a deep dive into the market movers and shakers, and today we're looking at all the stuff you've been watching.
Right.
We've been going through all the news and notes to bring you the need-to-know info.
Like it all means for you.
Exactly. So think of this as like...
rapid-fire download.
Yeah. To understanding the forces shaping the market right now. Everything from tech giants, global trade, even to some whispers about, potential policy shift. Stock is culprit, it seems like, is their AI and data center revenue. They just didn't hit the mark that investors were expecting.
Yeah, this is really interesting, right? Because it underscores the importance of AI in the market right now. Companies that are really leading the charge are being rewarded.
Oh, absolutely.
While those who seem to be lagging behind are facing the consequences.
Right. Yeah, it makes you wonder, right? Are we seeing a bubble forming in this AI sector? Or is this truly the new standard for evaluating a company's potential?
That's the million-dollar question right there.
Right.
Is this hype justified, or are we headed for a crash?
Yeah. Now, on the flip side of that, we've got NVIDIA, major player in the AI chip market.
Yes.
And their stock is actually up today. It looks like they're riding the wave of success of companies like Supermicro,
right,
who rely on NVIDIA for their components.
Yeah, they supply a lot of the components that go into the systems that are driving this whole AI boom.
So it's a bit of a mixed bag right now in the tech world.
It is. You got some winners, you got some losers, but it all points to, I think, a larger trend that we're seeing, this increasing importance of AI.
Well, it's so fascinating to see how interconnected everything is. Yeah. I mean, NVIDIA's success isn't happening in a vacuum. It's directly tied to the growth of these companies who are utilizing their technology. And in this case, it means AI. It's a great example of how we can't just look at individual companies in isolation. We have to understand the whole ecosystem to really make sense of these movements.
Yeah, the bigger picture. And speaking of that bigger picture, we can't ignore the impact of global events, right? So Apple's stock is down today, and a lot of people are pointing to renewed U.S.-China trade tensions as the cause. The global supply chain constantly being tested.
Oh, yeah. It's always in flux.
It's always in flux.
And especially those trade tensions, the tariffs, they inject uncertainty into the markets.
Oh, for sure.
And that always makes investors nervous. It's no surprise, then, that gold prices are surging.
To record highs.
Right.
Because people are seeking those safe havens in uncertain times.
Yeah. Speaking of uncertainty, there's some interesting news circulating about potential policy shifts. Trump has floated the idea of closing the Department of Education, and some are speculating that stocks like Etsy could benefit if that were to happen. On the other hand, he's also put forth this idea of establishing a sovereign wealth fund.
This is where it gets really interesting. Right? Because that sovereign wealth fund proposal is definitely raising eyebrows.
Oh, yeah. Some see it as this bold move, It could potentially generate returns, boost the economy.
Right.
While others are, concerned about potential risks, government overreach, market distortions.
Yeah, it's definitely one that warrants a closer look, especially for anyone trying to, understand those long-term implications for their own investment strategy.
Right, because it's like the markets are trying to decipher a puzzle.
Yes.
With constantly shifting pieces.
Right. It's a game of chess, not checkers.
Right.
Yeah.
You've got companies making these big bets on AI, global trade tension simmering, and then you've got these potentially major policy changes looming on the horizon. A lot to unpack, but that's why we're here, right? To kind of dive into these complex issues and help make sense of it all.
That's what we do.
So, speaking of diving in, let's shift gears and look at some specific companies making headlines today. Let's start with Uber, reporting their, quote, strongest quarter ever, unquote, but still seeing their stock drop.
Interesting, right. It's a classic case of the market looking ahead, Even with strong current performance, if the guidance doesn't meet those sky-high expectations for future growth, investors can get spooked.
Yeah, they can definitely get a little skittish.
Just a little bit.
Yeah.
And speaking of companies facing challenges, Ford stock is also down despite decent earnings. What's going on there? It seems like their guidance raised some red flags about their ability to weather the ongoing supply chain disruptions.
Oh, right.
And the general economic headwinds we've been seeing, the auto industry is particularly vulnerable to those kinds of macro-level pressures.
Makes sense.
Yeah.
And speaking of macro factors, everyone's wondering what the Fed will do next with interest rates.
Big question mark.
Right. We did see the 10-year Treasury yield dip below 4.5% today. which could signal some easing of those supply fears that have been looming.
Yeah, that's a data point that a lot of people are watching very closely. Because the Fed's actions have such a ripple effect across all sectors of the market, it's no surprise that everyone's on edge.
Absolutely.
That dip in the 10-year Treasury yield could indicate that investors are anticipating a less aggressive approach from the Fed in the short term, but we'll have to wait and see.
We'll have to wait and see.
Yeah.
Speaking of waiting, MicroStrategy, the company known for its massive Bitcoin holdings, is finally reporting earnings after putting a pause on their Bitcoin purchases.
Yeah, this is a big one.
This could be a big indicator of how institutional investors are feeling about cryptocurrency right now.
Absolutely. MicroStrategy's performance is so closely tied to the ups and downs of Bitcoin that their earlier decision to pause purchases really signaled a shift in their strategy. If they decide to jump back in, it might encourage other institutional investors who have been hesitant about dipping their toes in the crypto waters.
They're kind of a bellwether.
Yeah, they're a bellwether for institutional interest in Bitcoin.
Now, shifting gears to another entertainment giant. Disney's stock is drifting a bit after their earnings report. Did their streaming numbers fall short of expectations?
Well, they did see some growth in streaming subscribers, but it seems like the overall results just weren't enough to really impress investors. There's definitely growing concern about the long-term viability of streaming services.
Right.
As competition heats up and subscriber growth begins to slow down, even a powerhouse like Disney isn't immune to the challenges facing the industry as a whole.
Makes sense. And while we're on the topic of industry giants, Google's parent company Alphabet announced a massive $75 billion spending plan, yet their stock is down after earnings. Is Wall Street worried about that kind of investment?
It appears so. While Alphabet emphasized their investments in AI, which is in line with the current market trends, right? The sheer size of the spending plan seems to have raised concerns about their profitability down the line. It's a reminder that while the market loves to see companies investing in future growth, it also expects a level of certainty and a clear path to returns.
So it's a delicate balance, right?
It is a very delicate balance.
Yeah.
Invest too little in AI and you risk falling behind. Invest too much and you spook investors who are concerned about short-term profits.
Right. Speaking of delicate balances, Palantir's CEO has been calling the company a software juggernaut. But it seems like analysts aren't buying it. What's the disconnect there?
Palantir is an interesting case. They've carved out a niche for themselves in data analytics and AI. But their business model, which relies heavily on government contracts, has drawn some scrutiny. Some analysts just aren't convinced about their long-term viability and profitability, even with the CEO's confident pronouncements.
It's a show me, don't tell me situation.
Exactly. The market wants to see those bold claims backed up with concrete results and a clear path to sustainable growth.
Right now, on a brighter note, Novo Nordisk is anticipating positive news from the FDA regarding their weight loss drugs. Could this be a game changer for them?
The pharmaceutical industry is always on the lookout for that next blockbuster drug.
Absolutely.
And Novo Nordisk's weight loss medications have generated a lot of buzz. If the FDA gives them the green light, it could be huge, both for the company's bottom line and for the way we approach weight management as a society.
Right. It's fascinating how these individual company stories often tie into larger societal trends, like the increasing demand for effective weight loss solutions or the growing role of AI in various sectors. It's all connected.
Absolutely. And speaking of connections, the U.S. Postal Service is resuming Chinese parcel deliveries, which seems to have implications for companies like Amazon and Alibaba. What's the link there?
Well, it's interesting because this resumption of Chinese parcel deliveries, some people are viewing this as a potential easing of those trade tensions we talked about earlier. And that could be good news for those e-commerce giants like Amazon and Alibaba.
That depends so heavily on international shipping.
Right. But it also raises the possibility of increased competition.
Right. From Chinese sellers.
Yeah.
Which could impact those profit margins and market share for U.S. companies.
So it's a bit of a double-edged sword for them.
It is.
Potential benefits on the trade front, but also that potential downside when it comes to competition.
Absolutely.
Speaking of companies that might actually benefit from this shift, Etsy seems to be positioned well, thanks to Trump's tariffs on China.
Yeah, their platform focuses on those handmade and vintage items.
Right.
Many of which are produced domestically.
Right.
So if tariffs make those Chinese goods more expensive, it's possible that consumers will turn to Etsy for those more affordable options.
Yeah, for sure.
And that could give them a real edge in the market.
It's a great example of how to spot those hidden opportunities amidst all the market turbulence.
For sure. For sure.
And speaking of opportunities, there's been some talk about banks wanting to get in on the cryptocurrency action. Is Trump really opening the door for them to dive into the world of Bitcoin?
It certainly seems that way. You know, Trump's deregulation push has extended to the financial sector,
Right.
and some banks are eager to capitalize on this growing interest in cryptocurrencies. They see the potential for big profits by offering crypto-related services.
Oh, yeah.
But regulators are still trying to figure out how to oversee this emerging and often volatile market.
So it's another area where we're seeing a mix of excitement and uncertainty,
It is.
which seems to be kind of the theme of the day when it comes to the markets.
Yeah.
It's a lot to keep track of, but that's exactly why we do these deep dives. We want to help you make sense of all of these complex trends and events. By understanding the forces at play, how these different sectors of the market are interconnected, the potential impact of various global and political events, you can make more informed decisions and navigate these turbulent times with greater confidence. It's all about connecting the dots and seeing that bigger picture.
Absolutely. Couldn't have said it better myself.
So as you continue to explore the financial world, remember to think about how these headlines, these market movers, impact your own investment strategy. What are the risks you need to be aware of?
Right.
And what are the opportunities that might be emerging?
Those are great questions to keep in mind. And remember, there's no single right answer when it comes to navigating the markets. The key is to stay informed, be adaptable, and never stop learning.
Until next time, happy investing.